Money flow like a river, property drinks no quiver.
Talking to somebody this week, I got asked this question. I have £40,000 and I want to get a return of 8%. Can I do that with a buy to let? Let's have a look. So effectively, this is a question I get asked a lot. And there are many questions that should be asked behind this, but that's a good start. The thing is, for you as an investor, you need to be able to answer these questions to understand, or to at least to prove to yourself that you know what you're going to do. And you need to find the answer to these questions with numbers and in a proven market, at least to know what your objective is going to be. So ultimately, answering this question is going to give you clarity to start your investment, which is the number one priority that you, as an investor, as the owner of the money, need to do. But let's have a look how I approached the answer to this question, and hopefully you learn that as well. And if you like the way that I do this, you will have very soon the opportunity to get your hands on the Property Investor Toolkit, which I'm going to release very, very soon. So pay attention, stay tuned, and then hopefully you can get your hands on it. But let's answer this question. The first thing I always do to answer this question is to effectively to come and use one of my calculators. These calculators are the ones that I've built with the knowledge I have for the market I specialize in. And the calculator is going to be the same, but the numbers that you put into the fields is going to be different depending on the area you are focusing on. So for this area and for the investments I know, potentially, let's have a look what that person would have to do or could have to actually achieve that sort of value. So right now, the calculator is set to £150,000 asking price. And with all the costs and everything that we'll see in a minute, the investor would have to have about £64,000 to be able to achieve around 9% yield and 5.8% return on investment. That's the first question I asked this investor. Are you talking about 8%? Are you talking about gross yield, or are you talking about return on investment as a net value? And for you as an investor, it's very important exactly to know what you are talking about so you can compare those numbers across different markets. And if you're talking about gross yield and if you had £64,000, then this potentially investment kind of be what you would be going towards to. But in this case, it's not, because this person only had £40,000 to invest. So the first and most important value to actually affect that number is the asking price, because you only have £40,000 and you need to take into account a lot of expenses. Then you need to come down and change that asking price, meaning you can only afford something cheaper. Basically, that's what it is. Let's just move the asking price or the price of the property you can afford to 110,000. Still, you cannot make it in this case. So let's have a look at 100,000. And then still you cannot make it. We are talking about potentially an 80,000 property about that. So the first thing is that for that amount of money, £80,000, don't look at this yet. We would be looking at £41,000. And then the maximum you can go to the market to go and buy is an £80,000 property. Now, there are some assumptions here, and then you can start moving some other levers that you could use to afford a much higher price property. So let's have a look, for example, and let's just focus on this £80,000. Now, this property, I'm going to hide this module here. If you find it yourself, then you save yourself £5,000. Legal fees, you can try and find cheaper lawyers, and then these kind of values would be kind of set. Now, if you can find a 75% mortgage or higher, let's say 80% at the moment, you can find 80%. Then we would be talking about that you now could afford something bigger. So let's say 32,000. Now we can maybe increase to 90,000. Now you can do a little bit more just because you change the amount of leverage that you have in your investment. Now we can go to a little bit more. according to this number. So effectively now, by finding the property yourself and doing all the work that needs to be done and increasing your leverage from 75 to 80%, now you can afford a property, a much larger property, which that's the effect of knowing those numbers. Let me stop here to tell you that the bridge between the idea of investing in property and actually making it a reality, you need to build bridges, and one of those bridges is effectively to have a financial model by which you can actually do this. It tells you the outputs for your inputs. I have this much, and therefore I can achieve this much. Now, let's say you have decreased as much purchasing cost as you can, and now with £40,000 you can achieve or find a property 110,000. Now, when you change this value, the size of the property changes. Probably the location could change, and that affects the rental yield. So let's say this is now set. Obviously, the stamp duty changes as you increase the value of your property, and it depends on the structure that you're going to buy that property as well. That's important. There are some adequation for the property. You can also, for example, look at a strategy whether you don't furnish the property, and then you could just spend, let's say, be £1,000 for different bits and pieces. Maybe you're going to rent the property with white goods, and that's it. So now you can afford a little bit more, maybe £120,000 property, a little bit more, kind of there. So now we can afford £125,000 property. Again, this is bigger and this is important, but it affects your strategy. If you're going to rent the property empty, just with the white goods, probably you are going to get a lower income for the property as such, and therefore that needs to be corrected. As I said, the size of these properties, which is now we are going to £125,000, if you're going to rent it as a single house in the area where I invest, you probably maximum you would get £150 pounds right here. In this case, for example, we would, if you're going to do it yourself, let's say you're going to not pay an agency to do it, then repairs 5%, insurance, and then what you would do is you, for tax purposes, you enter a value, you rent an office to your limited company, an office in your house, and you can set a market real value. Let's say, just for the sake of this number, we're going to leave this 0 so you understand what this is. Effectively, you would have to pay corporation tax on it, but that's for another case, because we are making the numbers here. We are doing the numbers as buying this property as a limited company. Now, very critical that if we do that, when we change the rent and we change when we change the size of the property, because we can buy a bigger property, but we don't furnish it, and we choose a strategy of only renting the property as a single let, that affects the rent. Therefore, that affects return on investment. So at that level, we would have about 9% yield and 6.48% in advance. Now, this is important, as I said, because if you have other investments that you want to look at and you have a high return on investment, then you might opt for those ones. Or maybe you are comfortable with these sort of levels of investment. On top of that, you would have annual price growth rate, which is capital gains. And therefore, if you buy this at 125,000, in 20 years, that would be worth £185,000. So you're going to produce gains on top of the income that you're getting. But it's very, very critical that you understand and can do these numbers to be able to know, like if you go to the supermarket, you can answer the questions, what can I afford? Can I afford a full grocery basket, or can I just afford a couple of items? And the same thing happens in property when you know exactly how much you have, what's available, how much it costs to buy it, and therefore what you're going to get. Also, apart from that, you need to know how much it's going to cost to run it and how you're going to do follow that strategy. Therefore, that's why I put all this information here, how much is going to cost running it and doing the whole system, the whole process. And that will give you a number, but especially will let you understand whether you as an investor want to get into something like this, into strategy like this, or you want a different strategy that could give you a different return, but then it might require more of your time or less of your time, depending on what you want to do. That's effectively how I answered this question from an investor. And basically, as you can see here, you could get close to 8% if he's talking about return on investment, but you can get higher than that if he's talking about gross yield. Depends what, as an investor, you are talking about. Now, I got another question from another person, and it was basically this. I have £11,000. I want to buy a house and I want to convert it into one studio and then another section where I can live in. And if you see at the levels of the cost value here, you'll see that for £11,000, you won't even cover the purchasing costs. For example, if we say she's going to buy a studio, maybe £30,000 studio up in the north, she would basically be able to, well, she would have to actually go even lower than that, depends on the numbers. And even here for a studio, I'm not including running costs like service charges, etc. So right away, you can see here that that idea of buying a house, refurbishing it, and creating a separate studio with £11,000 is not viable because it's not enough money. That again is how you as an investor get to know firsthand how much is what you can do with the money that you have, but especially important how much you need to do an investment to generate certain amount of cash for you, of income. There are many pieces of this puzzle. It's not easy, but once you learn this, it becomes very clear and you can kind of have these tools that will help you along the way. So again, if you want this sort of kind of tools, pay attention because we are going to be releasing a toolkit which contains these and other tools. Very important. We are going to be running workshops across monthly and some seminars in London. And it's especially for this. I'm going to give you a tremendous amount of value and education so you can at least evaluate the market and know exactly what we are talking about. This is Noel Cardona. You can find more information about us at propertycashflow.co.uk. If you have properties you want us to manage in Liverpool and Wirral, send us a message at info@propertycashflow.co.uk or send me a WhatsApp message 07411 904 124, 07411 904 124, and I'll be happy to continue the conversation with you. Thank you very much.